Thanks for clicking. Canada's real estate market is in a stalemate, with sellers unwilling to sell at current prices and buyers unwilling or unable to buy at current rates. This according to Robert Kavchik, an economist at BMO Capital Markets. The message came during the Bank of Montreal's weekly podcast, which looked at whether or not the housing market has bottomed and what it would take for us to see a resurgent in housing market activity. We've talked about Kavchik before on this channel, who made headlines during the pandemic housing boom for predicting that it was the ultra-low interest rates, rather than a lack of supply, that were responsible for the meteoric surge in housing prices.
He got lucky.
And Kavchik's comments about a stalemate comes as a new report from TD says that Canada's house prices could still have a ways to go before hitting bottom. Given that a majority of Canadians who do not already own a home have given up on the idea that they ever will, these are definitely timely reports. So what I want to do today is go over BMO's podcast where Kavchik talks about the ongoing stalemate between buyers and sellers, discuss the report coming from TD saying that house prices have still not hit bottom, and then discuss what to look for next. Speaking of next, the Bank of Canada is set to make its interest rate announcement tomorrow, which will obviously have big implications for Canada's real estate market. We'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this podcast. Onto the podcast, Kavchik gets right into the stalemate that is currently characterizing Canada's real estate market. On the demand side, buyers can't afford pandemic prices at 2023 interest rates.
Buyers can't qualify or pay for prices that existed 6 to 12 months ago at 4.5% to 5% mortgage rates. They just can't.
Yeah, even though mortgage rates have slumped down to around 4.5% for a 5-year fixed, they are still 2 to 3% higher than they were during the pandemic. And with rates sitting at 4.5%, buyers are either unwilling or unable to pay pandemic pricing.
Selfish.
On the other hand, sellers have had the taste of the good life throughout the pandemic and are unwilling to sell their homes for less than they would have gotten a year ago.
The flip side of that, sellers are sitting there like, okay, well, I don't want to sell into a market that's 20% down. There's nothing that's forcing me to do so.
Indeed, as we've talked about so many times before on this channel, with the banks propping up the real estate market, allowing extended amortizations or even negative amortizations, sellers, right now at least, have minimal reason to enter a declining market.
I'll see what I can do.
And as a result of buyers being unable or unwilling to buy at current interest rates and sellers unwilling to take a 20% loss, the market is currently at a standstill. It's at a stalemate.
So we're more or less, it seems, at a stalemate for now, waiting for prices to fall or rates to fall, and prices don't look like they're going to fall given the new balance to the market and the fact that there is no forced selling.
So we're currently in a stalemate. Buyers can't or won't buy, and sellers won't sell. What breaks? Will we see a cut in interest rates bring buyers back to the market? Kavchik points out that we're probably not going to see a cut in interest rates until we've seen job loss. And job loss typically isn't good for the real estate market.
If we start to get rate cuts in the second half of this year, why are we getting those rate cuts? Is it because the economy is really cracked and we start to see some job loss? Well, that's not going to help the demand side, right?
And even if we do get those rate cuts in the latter half of this year as a result of an increase in job loss, those rate cuts will take a while to work their way into the real estate market.
Typically, you'd see the demand response coming out the next cycle when rates are down and the economy is starting to pick up again. So that wouldn't be like a story for the second half of this year, I don't think.
So there isn't a whole lot, at least in the near term, according to Kavchik, that is going to bring a lot of demand back to the real estate market. But how about sellers? With the banks intervening to ensure that we don't see a whole lot of anticipatory or forced selling, what brings more listings to a declining market?
What's going to bring more listings to the market? Job loss? I mean, typically, from a housing cycle perspective, yes, but right now it's the opposite, right? We have still an extremely tight job market here.
So on the demand side, Kavchik says we're looking for job loss to be able to get those rate cuts to eventually bring buyers back to the market. And as well on the supply side, job loss, which we don't have as of yet, may indeed bring more sellers back to the market. So it looks like, for now at least, until we see job loss, which is very unlikely, at least in the short term given last week's job numbers, we're at a standstill in the market. We're in a stalemate. So according to Kavchik, we have a market that is going to be stagnant for at least some time. We're not going to see prices drop much further, but we're also not going to see them pop back up to pandemic highs anytime soon either.
I don't see a lot of reason to think a lot of supply is going to flood on the market. But at the same time, it's kind of hard to see just a immediate snapback in demand too. So we might kind of stagnate here for a while.
With that said, according to a new report coming from TD, Canada's real estate correction still has a little bit to go. And despite the price gains that we've seen in Toronto and some of the other big cities over the past few months, Ontario-wide declines are likely to lead to a 21% drop in Canadian-wide home prices from peak to trough. And this is likely to continue for some time, says TD, with 2023 and 2024 predicted to see slower than average price growth. So, we have BMO's Robert Kavchik, who says that the real estate market will be at a standstill, at a stalemate for at least the foreseeable future, with sellers unwilling to sell and buyers unwilling or unable to get into the market as well. And we have TD saying that Canada's real estate market still has a ways to go before it does indeed hit bottom. With that said, both banks seem to agree that, all things being equal, the major massive price corrections that we've seen over the past year have come to an end. And both banks seem to concur that we're not going to see a return to pandemic level pricing, at least not for the foreseeable future. TD could be right, we could see further downward pressure on prices Canada-wide. On the other hand, BMO could be right, we could see a major stalemate between buyers and sellers that could drag on for months, if not years to come. With that said, we will continue to track Canada's house price growth on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.